Buying in this economy? That's the question everyone is asking. Prices are unpredictable, rates are confusing, and consumer confidence is all over the place. People are scared, but the truth? Fear creates opportunities. In this video, we're gonna break it all down. No fluff, no fear mongering. Just real data, current market trends, and my honest perspective on why now might be a great time to buy. So let's zoom out. Buying a home isn't just about interest rates or news headlines. It's about building a life. It's about not being at the mercy of your landlords. It's about creating long-term wealth while most other people here in Canada are gonna be worried about their next 3 months. That means thinking different, moving with intention, and not letting fear guide your decisions. So whether you're a first-time buyer, a real estate investor, or just someone trying to figure out if the market's rigged against you, you're in the right place. So what's really going on? Well, let's look at the Canadian housing market and the overall economy here in fall of 2025. So the first thing to note is housing prices. According to the Canadian Real Estate Association, national home prices have declined about 5.6% year over year as of Q4 of this year. That's right now. Major cities like Vancouver and Toronto have seen even deeper declines, and you really need to consider regional variation as well. Places like Atlantic Canada and some of the prairie provinces haven't seen too much downward pressure. All the while, Ontario and BC have seen the biggest corrections. This is due to just more listings hitting the market, primarily from renewals and softer demand. This means that buyers are seeing some of the most affordable price points that have existed in the last 5 years, and that those crazy price points that existed during COVID, well, they're coming back to reality. And while we're on the topic of affordability, an online affordability calculator has actually showed that the income needed to afford a home here in Victoria has actually dropped by about $10,000 since last year. And this is mostly due to overall price corrections and the fact that rates are significantly lower than they were a year and a half ago. Now, let's shift our focus to something that's really going to impact the housing market over the next 12 months. Mortgage renewals. Over 2 million Canadian households are expected to renew their mortgage before the end of 2026. And most of these mortgages are coming out of that ultra low rate area from COVID, where rates were between 1% and 2%. So they're really gonna see quite a jump in their monthly payment. The average is expected between $500 and $1,200 a month increase in their monthly payment. And with many Canadians already at the limit when it comes to their affordability, based on a ton of other factors which we won't get into, many are gonna be forced to downsize, adding more inventory to the market. This is one of the variables why we're seeing a bit of an uptick in listings coming to the market. And if you're a buyer, this just gives you leverage to negotiate the price if you're putting an offer in on a house. So with this being said, you might be thinking to yourself, wow, things sound pretty good. What's going on? Why are prices dropping? Why isn't everybody jumping at the bit here? So let's talk about consumer confidence, because that's a whole nother variable which is impacting the real estate market. The Conference Board of Canada's latest index in consumer confidence shows a big increase in overall pessimism. Only 17.4% of Canadians believe right now is a good time to buy. This might scare off most people, but for the strategic buyer, this just signals reduced competition. Warren Buffett said it best: be fearful when others are greedy, and greedy when others are fearful. In real estate, that means buying when the herd is scared. Now, where's that fear coming from? Let's talk about the Canadian economy. GDP growth has been relatively modest this year. Some would call it stable, but the overall expectation is that it's not getting stronger anytime soon. Inflation is also well within the Bank of Canada's target, hovering at around 2.6%. Employment remains relatively strong, though wage growth has slowed. That means the economic floor is still intact. There's definitely not a crash, it's just starting to cool down. And lastly, the Bank of Canada has said that they're going to pause rate hikes for a bit, but they are hinting at more rate cuts come mid-2026, assuming inflation stays in line. Now, let's look at the rental market. Canada-wide rental prices are still up about 7.6% year over year, and vacancy rates in places like Victoria, Vancouver, Greater Toronto area are well below 1.5%. So it seems really strong. And second to that strength, many renters are actually still seeing rental increases on an annual basis. And as always, those that are looking to stay put, plan to stay in their city long term, renting is becoming increasingly volatile, while homeownership can offer you that predictability and stability. Now, let's look at the risk versus reward. Is there a sweet spot? Is now the time to buy? Well, on that note, we kind of have to talk strategy. Right now, there is a bit of a rare window. Sellers are a lot more open to negotiation, and multiple offer scenarios are becoming much less common. That means buyers have a bit more room to breathe. You're not racing to the seller against 15 other offers. And it's a lot more comfortable of a time to buy as well. You can put an offer in with conditions, financing, inspection conditions, things that were being completely waived in 2020, 2021. Let's say you buy a $700,000 home and you're able to negotiate 5% off the asking price. That's an extra $35,000 in your pocket right now. And let's say you get a variable rate mortgage, giving you a ton of flexibility, but locking in that discount so you can get a rate of 4%. And let's say rates continue to fall. Prime rate continues to fall and fixed rates aren't close behind as you move through 2026. One, you're capitalizing on prime rate dropping. With variable being tied to prime and you locking in that awesome discount, you're getting a lower rate. And two, With variables being so flexible, you have the ability to convert from a variable to a fixed at any given time. And usually, fixed rates aren't far behind prime. So you're gonna be able to lock in that lower rate at that later date if you feel the need to. This is how long-term plays are made. You're not timing the absolute bottom. You're entering when there's an asymmetrical upside. You get in before everyone sees the opportunity and the crowds end up coming back. So here's the truth about timing. People ask me all the time, when's the right time to buy? Here's what I say. Firstly, if you're financially ready and you're buying for the purposes of living in the home, the best time to buy was yesterday. That's because in this scenario, you're buying a home that meets your goals now and aligns with your goals in the future. You're not focused on immediate appreciation or immediate investment return. In the right market, real estate always goes up with the right amount of time. Real estate wins like this should be measured in decades, not months. And to be completely honest, most people that try and time the market end up shooting themselves in the foot and really miss their opportunity, or just never even buy. So something you should keep in mind and definitely walk away from this video with is that owning a home gives you long-term appreciation, protection against rising rents, and tax-free capital gains, as long as the property is your principal residence. You're living there. So if you're thinking 5, 10, 15 years ahead, now's the time you should really consider about getting in. If you're still watching this, you're definitely someone that gives a shit about their future, and I respect that. So here's what I'll say to you. Book a call with me and let's have a real conversation, even if you think that you're a year or 2 years out. Get your pre-approval started sooner than later, so you have 100% clarity on where you are right now and know exactly how to get to where you want to be. We can build a plan towards that. And lastly, don't let the headlines or the media exhaust you. Don't let it cloud your vision. Again, it doesn't cost any money to have a conversation and just get clarity on what you want to create. Don't forget to subscribe for future knowledge and leave a comment on where you live and what your biggest housing fear is. I would love to hear about it. Have the best day and I'll see you in the next one.